Cash flow is the lifeblood of any economy. It represents the movement of money in and out of businesses and industries. A healthy cash flow is crucial for growth and stability. In India, a developing economy with ambitious goals, understanding cash flow trends is paramount. These trends provide valuable insights into the financial health of our nation. India's economic landscape is vibrant and diverse. From bustling tech hubs to traditional industries, cash flow dynamics vary significantly. Analyzing these variations helps us identify sectors experiencing growth and those facing challenges. This understanding is critical for policymakers, investors, and businesses alike. For example, a sudden surge in investment in renewable energy may indicate a positive shift towards sustainable development. Conversely, a slowdown in construction activity could signal a weakening economy. By closely monitoring cash flow patterns, we gain a deeper understanding of the forces shaping India's economic journey. In essence, analyzing cash flow is akin to taking the pulse of the Indian economy. It allows us to gauge its strengths, identify potential weaknesses, and make informed decisions for a more prosperous future. Investments are the building blocks of economic growth. They represent an injection of capital into businesses, leading to expansion, job creation, and increased economic activity. In India, foreign investments in particular play a crucial role in driving cash flow and shaping industrial landscapes. Take the example of Eurofins, a global leader in bioanalytical testing. Their recent investment in a biopharma product testing site in Bengaluru highlights this trend. This investment not only expands their operations, but also injects significant cash into the Indian economy. This cash inflow stimulates further economic activity, creating a ripple effect. However, it's essential to recognize that investment decisions are complex. Global economic factors, industry-specific trends, and government policies all play a part. Eurofins, despite its overall positive global cash flow, faced challenges in certain segments of its India operations. This underscores the need for careful consideration of market dynamics. India's attractiveness as an investment destination is undeniable. Our young workforce, growing middle class, and supportive government policies create a fertile ground for investment. By attracting and channeling investments effectively, we can ensure a robust and sustainable cash flow that fuels long-term economic growth. India's energy sector is at a crossroads. As a rapidly developing nation, our energy demands are soaring. Simultaneously, we are committed to transitioning towards a more sustainable and environmentally friendly energy mix. This delicate balancing act has significant implications for cash flow within the sector. On the one hand, India's reliance on coal, a carbon-intensive fuel, continues to necessitate substantial investments in coal mining and power generation. This dependence on traditional energy sources ensures a steady, albeit potentially unsustainable, cash flow within the sector. On the other hand, India's ambitious renewable energy targets are attracting significant investments in solar, wind, and hydroelectric power. This shift towards cleaner energy sources is creating new avenues for cash flow, fostering innovation and driving job creation in the green technology sector. The challenge lies in managing this energy transition effectively. Balancing the need for reliable and affordable energy with the imperative of environmental sustainability requires careful planning and strategic investments. A well-managed transition will ensure a smooth cash flow shift, preventing disruptions while capitalizing on the immense potential of renewable energy. Section 4. Mergers and acquisitions, fueling cash flow dynamics. Mergers and acquisitions, or M&A, are major drivers of cash flow within and across economies. These corporate transactions involve the buying, selling, and merging of companies, leading to significant capital flows and reshaping industries. India, with its growing economy and evolving corporate landscape, is witnessing a surge in M&A activity. According to a PwC report, India's M&A market performed exceptionally well in 2024, with deal values soaring by an impressive 20%. This signifies a healthy appetite for growth and consolidation among Indian businesses. These transactions inject substantial cash into the economy, influencing everything from stock markets to employment rates. M&A activities impact cash flow in several ways. Firstly, the acquisition process itself involves large sums of money changing hands, directly influencing cash flow. Secondly, post-merger integrations often involve restructuring, streamlining operations, and potentially divesting non-core assets, all of which impact cash flow dynamics. The global M&A landscape also plays a role. With global M&A activity projected to continue its upward trajectory, driven by factors like AI investments and private equity exits, India is well positioned to attract its share of these deals. This positive outlook bodes well for continued cash flow momentum within the Indian economy. Section 5. Global Currents: Navigating Economic Uncertainties. While domestic factors play a significant role, global economic currents exert a powerful influence on India's cash flow. Interest rate fluctuations, geopolitical events, and global trade dynamics can all create ripples that impact businesses and industries across the country. The US Federal Reserve's recent rate cuts, for instance, have created a complex environment for investment decisions. While lower rates can stimulate borrowing and investment, they can also lead to capital flight as investors seek higher returns elsewhere. This intricate interplay of global financial forces requires careful navigation. Geopolitical instability adds another layer of complexity. Events like the new Trump administration in the US and the collapse of the Assad regime in Syria introduce a degree of uncertainty in global markets. This uncertainty can impact investment decisions, potentially affecting cash flow into emerging economies like India. Despite these challenges, India's inherent economic strengths, coupled with prudent fiscal policies, provide a degree of resilience. By closely monitoring global economic trends, managing risks effectively, and fostering a stable and predictable investment climate, India can navigate these global currents and ensure a healthy cash flow to support its growth aspirations.